Hello folks, welcome back to another session. In this video I will show you how to trade the double bottom pattern, the double top pattern correctly. I felt I should make a video on these patterns, that how to trade them correctly, as I am the member of several trading groups on social media and I saw many of the traders who were sharing their trading setups, who were sharing double top patterns, double bottom patterns, and they were trading them completely the incorrect way. Noticed many of the new traders are also trading it the wrong way. So I thought to make a video on it to guide the traders on how to trade these patterns most effectively. So stay tuned and enjoy the video till the end. You can see this pattern over here. It is a double top pattern and you can also see its results. So I will start from the double top pattern. So let's start. Let me show you where to trade it and where to avoid these patterns. Let me show it to you on the paint. The first way we're gonna trade the double top pattern is as a reversal pattern, because I have explained it in my previous videos too, that the double top pattern and the double bottom patterns are reversal patterns. So first of all, we will be trading it on the top of an uptrend. As we can see on the chart too, let me minimize it a little. The trend was completely to the upside. The trend was an uptrend. The market was making higher highs and higher lows till the point where the market formed this double top pattern. What the market did here was the market made a significant high here. The market retraced back and made a second high, which is the double top, and while retesting the first high, the market formed this bearish engulfing candlestick. So it is not the correct way to trade double top directly from the retracement. We will wait for a candlestick confirmation, which will be either a pin bar or which will be either a engulfing candlestick. So here we saw we would have set our pending order below the engulfing candlestick and we would have set our stop loss above the top of the double top. So this was the example to trade double tops on the exact top of an uptrend, as it is a reversal pattern. So let's come again to the paint. Here I will show you. We will not trade this area directly. On the retest of the first high, we will wait for a, let's say, a pin bar, or we will wait for a bearish engulfing candlestick. Let's say the traders would have the beginner traders would have took the trade when the markets retested this area. So it is not the way we will trade it in the market. We will always wait for the candlestick confirmation. So this is the first mistake. Make sure to not repeat these mistakes again in the market. The second way to trade the double top patterns is in a, let's say, a retracement move. This was the impulsive move. The trend has reversed here and the market make a retracement move, came down and again retested the previous high. It is an intermediate term high, and here we will also wait for the candlestick confirmation. We will never enter the market directly on the retest of the initial high. We will wait for the candlestick confirmation. It could be either a pin bar or it could be either a bullish engulfing candlestick. So this is how we will trade the double top pattern. Where to avoid this double top pattern. So let's say the trend is an uptrend. The market made an impulsive move. So if the double top pattern appear at this area, we will try to avoid it in an uptrend. We will only trade the double top pattern in a downtrend, or we will trade it at the extreme up point of the uptrend, as I showed you on the chart here. So the first way we could have traded, and as I mentioned, you can say the market, this was an impulsive move and this is a retracement move. You can see it is a clear setup. The market made an initial high, the market retested it and made a double top, and here you can also see the candlestick confirmation, which is a pin bar. And after the candlestick confirmation, the market move is quite obvious. Let's say we would have entered the trade from this area, from the lower point of the pin bar, and the market moved to this point. So these are the examples of how we will trade the double top, and I will also show you how to avoid the double top patterns in a uptrend. You can see here the market is in a complete uptrend. This was an impulsive move. The market made a high, significant high here. The market again then retested. So it is quite obvious that the market formed a double top pattern. Let's say if you would have took the trade at this area, so how much we would have gained from this trade if we have set our target at this point, and we would have set our stop loss above the high. So we can clearly see this trade would have triggered our stop loss easily. So this is the reason we will avoid double top patterns in a clear uptrend, unless we know that this is the reversal pattern and the market is about to make a reversal at that point. So now let's move toward the double bottom examples, and let me show you how to trade the double bottom pattern correctly, where to trade this pattern and where to avoid the double bottom pattern. So the mistakes most traders are making while trading the double bottom pattern is that when the market makes a significant low, and when it retested the significant low, the traders take the entry directly on the retest, and they assume that it will be a perfect double bottom pattern. But most of the time it triggers their stop losses and their trade ends up in losses. So what we will do, we will wait here for a pin bar, and when the pin bar appear at the retest of the previous low, only then we will trade it. Or the other way, we will wait for a bullish engulfing candlestick. So the first thing, we will wait for the candlestick, and secondly, as I have said that these patterns are reversal patterns, so we will look for the double bottom pattern at the end of a downtrend and let me show it to you on the charts. Here we can see the trend was clearly a downtrend. The market made a significant low at this point. Let me straighten it. Yes. Again, the market retraced back at this point and retested the second low, the initial low. But as I said, the market formed a bullish candlestick at the retest of the previous low. So we would have took the entry. You would have set a pending order at this area just above the candlestick confirmation. We would have placed our stop loss below the double bottom pattern. So this is the first way. Here we knew that the trend is changing because the market made a significant low, the market retested it, and the market formed a powerful bullish candlestick. So that was the first way we will trade the double bottom pattern at the complete downside or the complete down level of a downtrend, and lastly we will trade it in a trending market. We will trade the double bottom pattern in an uptrend, because as they say that trend is your friend, so these patterns are also trend friendly. And let's say it is a retracement move, and when it appears in a trending market at a retracement move and give confirmation of the candlesticks, the probabilities of winning the trades will always be high as compared to taking that sort of entry in an opposite trend. So let's say the market made a double bottom pattern at the retracement move and the market formed a pin bar at this point, or the market made a bullish candlestick pattern at this point. So this is the area where we will trade it. We will place our stop loss below the double bottom, and we will target, initially we will target the previous high which the market made at the impulsive move, and we can also extend our take profit area. So again, if the market make this pattern at the retracement move, we will wait for the candlestick confirmation. I repeat, we will wait for the candlestick confirmation, and only then we will trade this pattern. So this is how we will trade it. There is no guarantee that this pattern will always appear in a downtrend, in an uptrend, but if we change the time frames, if we move to a higher time frame, or if we move to a lower time frame from a higher time frame, there are chances that we will confront these patterns. So let me show you this example on the chart. As we can see, the market is in a clear uptrend. The market made a impulsive move. This is the high of the impulsive move. The market retraced back. This is the retracement move. The market formed a significant low. The market retested back and tested the low. The market formed a bullish engulfing candlestick on the second touch. So this is the only confirmation we will need. If we are having a support area, a resistance area at the left side of the market, that will add value to the pattern. So that is just a plus point. So we would have set our stop loss below the double bottom pattern, and we would have targeted this high which the market made at the impulsive move, and the trade is in front of you. It is quite obvious what happened after the formation of this pattern. So this is how we gonna trade the double top patterns at the bottom of a reversal of a downtrend, and this is how we gonna trade the double bottom pattern in the trending market or in an uptrend. So now I will show you where to avoid this double bottom pattern. Let's say we know the market has turned from a bullish trend to a bearish trend, and the trend has changed. The market made a double top pattern, which is a reversal pattern, and it made an impulsive move. It broke the previous lows, which confirms that the trend has changed, and the market makes the double bottom pattern at the low of the impulsive move. So here we can't target this area, we can't target the high of the market. So I recommend that we avoid double bottom pattern in a downtrend. So here the chances are that the market will trigger your stop losses. So the best thing is to wait for a double top pattern here, which will continue the trend to the downside and which will trigger your stop losses. So let me show you the example of the later point which I discussed, that where to avoid the double bottom pattern. Let me show it to you on the charts. So here you can see the trend has reversed. The trend is now clearly a downtrend. It is making lower lows and lower highs. So we can know that the trend is a downtrend. And here the market made a significant low. I won't call it significant. The market retraced back and touched the previous low. Even the market formed a pin bar. Let's say if we would have set our stop loss below the double bottom pattern at this point, and let's say we would have targeted the high of the market, the previous high. So what happened? The market went upside and then it continued its bearish run. So it would have easily targeted, it would have easily triggered our stop losses. So this is how we're going to trade it. I explained the double top and double bottom patterns, how to trade it the best way and where to avoid these patterns. But the one thing that I consider is extremely important is candlestick confirmation, which we will look for. No matter what happens, we will confirm the candlesticks. So I hope this video has helped you. Thank you for watching and see you in another video. Take care.